Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And holy moly, what a very volatile day. Okay, as a day trader, this was we had some great tradable moves, level to level style, breakdowns of resistance, breakdowns of support, breakouts of resistance. I'm just happy with how the trading day went because the price action was amazing. We had volatility, we had movement. Inflation for consumers came in better than expected at 4.9. All right, and that's when we had that initial reaction, which was bullish. It popped from 410ish all the way up to 414.89, a few cents shy of the 415 resistant level. Okay, remember the blueprint. It's very similar to FOMC. Uncle Charles mentioned it a few times in his videos. Hopefully you guys caught it. I wrote it in my Substack. Hopefully you guys read it. And throughout my Discord, that watch out for that initial reaction. FOMC, CPI, PPI tomorrow. We want to watch out for that initial reaction. If you go to the last CPI, SPY popped up from 410 to 414-ish and ended the day around 407-ish if I remember correctly. That initial reaction is the point I'm trying to make. It's usually the fake out, okay? And it played out perfectly today, in my opinion. We had that bounce up, and then when market opened, that's when the reversal happened. All right, we bounced close to 415, and when the reversal happened, broke down that 413.5 support level. This all trade ideas in the group, and we got a very nice drop, going as low as 408.8-ish. That was the bounce at the 23.6 Fibonacci level. All right, 23.6 Fibonacci levels at 408.8. That's where the SPY bounced today, and it gave us a recapture, false breakdown setup. Started off the morning with a false breakout, ended the day with a false breakdown setup where we broke down 410, bounced off support around 408.8-ish. Recaptured 410 on the 15-minute chart, and it triggered a very nice move back up to the 413.5 to 413.8 zone that I have here, these yellow lines here, and that's where it paused at the end of the day. As a day trader with these volatile, I'm just very pleased. Level to level style work, and in my opinion, the fun does not end yet. All right, we have PPI tomorrow. Let's go over this real quick. PPI expectation is 2.4%. Okay, CPI is inflation for the consumers. PPI is inflation for the producers. All right, the people that make the products for us. What is the inflation for them? We're expecting it to come in at 2.4%. All right, in many ways, in my opinion, PPI can be as important or more important than CPI. Okay, because these are the producers. All right, if inflation goes high for them, they could increase their prices, which would affect the consumer. It trickled down to us. All right, so price action is the shepherd, but in theory, with the PPI, if you're a bull, you want to see PPI coming lower or 2.4% or lower than 2.4%. If inflation comes in high, 2.4% for the producers could have some problem. Okay, it could be a little bearish with the chart. Well, fundamental at least, it would be bearish. But the price action has the final say. So important for us to know the levels and know the setup so we can trade them unbiasedly. And once again, we're still dealing with the same levels. 412 and 410 are support levels. Bears need a close below 410 on the daily chart. We haven't gotten it. But to be bearish, I need to see that close below 410 to trigger more downside for the next day, possibly. Swing trade idea, if you will. All right? But we've yet to get that. And bulls, obviously right here, we're seeing the sell pressure at the 413.5 to 413.8 zone. And of course, that 415 level. Bulls need to clear those levels to trigger more upside. All right? Right now, we ended the day looking like a hammer candle. All right? But PPI tomorrow, anything could happen. All right? So remember the blueprint. The initial reaction is usually the fake out. It's happened. plenty of time before. Will it happen again with PPI? If that is the case, and we get the initial reaction is up, watch for the false breakout. If the initial reaction is down, watch for the false breakdowns using the levels that I gave you guys. All right? So you know the upside targets above 415 is 417.5-ish with 418.3, 420, and gap fill at 422. Below, once again, is 408.8. We got a bounce on there today. All right? 408, 406, 404. There's a gap at 401-ish with 399 below. That's the 50% fib level, all right, that I have there, 399. So bulls need to get above 413.8 and 415 to trigger more upside. Bears need to break down 410 in today's low of 408.8, which also happens to be the 23.6 fib level. Those are the levels, the key levels that we need to pay attention to, all right, guys? So, yeah, PPI tomorrow. Expect more volatility similar to today. Will we get a direction, or will we get more market maker fuckery? The price action will answer that. All right? Don't try to get into that prediction mode. Get in reaction mode. React. Okay? Triple Q is a 15-minute chart. Let me go to like a 1-hour chart. Pretty much just bounce between levels all day. We had a false breakdown setup intraday of the 322.5 level, which triggered a nice move to the upside. Okay? We managed to get the close above 325, all right? And once again, we're above that 324 level, but we actually got to close above 324 this time, all right? So that's a good sign for the bulls, all right? As long as above 324, stay bullish. If 324 is lost, get bearish, all right? Below 324, 322.5, 321. Definitely get bearish below 321 with 319, 317.5, and 316 below that. Okay, overall though, stay bullish above 324. Look to long above 325 with 326.4 and 328-ish in play. Both are gaps. There's also a gap around 332. IWM, it tried to clear this green trend line, but it failed. So unless we get a close above 175, can't get bullish just yet, all right? But above 175 would put 177 and 179.6 in play, all right? We need that close above 175 at end of day to trigger more upside, all right? As far as support still at 173. Look to short below it, all right? Below 173, could go fill that gap at 171.2 with 170 and 168.5 is below. Tesla, we got a double top here, guys, at around 174-ish. So if you're a bull, you need to see 174 cleared so we can cancel this double top. It needs to clear and then treat 174 as support for a sign of more upside. There is support at 166.5-ish, okay? It needs to break down 166.5 and 165, all right, if it wants more downside and for this double top pattern to play out, okay? Break down 166.5 and 165, and definitely could see more downside down to 162-ish, 168, 162-ish, 160, 158, and down to 156.4-ish. All right, so yeah, long above 170, definitely needs to clear 174 if you're a bull to trigger more upside. But if you're a bear, you want to see 166.5 and 165 support fail to trigger shorts. Apple still chopping, all right? After a big gap up last week, it's still chopping, building strength for the next move, all right? Possibly up as long as it, baits is above that 171 level, and especially above this purple trend line. Support is now at 169, all right? Stay bullish. There is resistance at 174.5. If that clears, look to long with 176 and 178.5-ish in play. All right, I would short below 171 and I would swing short below 169. All right, here's DXY still chopping. Not much to report here. Resistant levels are still the same at 102.2 and 103 with support at 100.8. Overall, just chopping VIX just chopping as well. Closed above the 20-day moving average yesterday. Closed back below it today. It won't make up its mind. All right. So same thing. Above 18.5 is bullish. Below 16 is bearish. Okay. And here is the dark pool. All right. We had 2.7 billion in premium around that 410.93. Good sign that the seeing this much activity, institutions are participating. So they're expecting more volatility, which is great for us. But yeah, most activity we got today was around that 410.93 level. Let me go to the option flow, filter it for 500K premiums or above because I want to see the big money plays. All right, a lot more activity today, but 92% in the puts. A good amount of sweeps and block orders. Mostly block orders are the ones with the big size today. All right, we're seeing a bunch of out the money puts coming in here. All right, but overall bearish. Triple Q overall bearish as well, 73% in the puts. Okay, block orders are the ones with the big size. There's 170 strike price for puts. Some very out the money puts. Okay, IWM 81% in the puts. Seen a lot of block orders coming in. Usually when we see these coming in, signs of volatility incoming. These are very in the money puts. 220 strike price, 200 strike price. Signs of volatility incoming, and this makes me very happy. Tesla 98% in puts, over 90,000 contracts in puts compared to 1,000 contracts in calls. Block orders. Holy moly, some very, very in the money puts. As usual, big move incoming for Tesla when I see flows like this coming in. All right, I can't wait. Use the levels, guys. And not much activity for Apple, but overall bearish. And here is the VIX. 73% in the puts. 25,000 contracts in the puts compared to 9,000 contracts into calls. All right, guys. So I hope you guys found value in this video. Thank you guys for watching. Hopefully you guys like the video. Hit the like button. If you're not, please subscribe. Other than that, thank you guys. Peace.